All right, welcome back. AMD set to report earnings top of the hour in overtime, but will those results be able to justify the near 80% rally in AMD shares over the past 3 months? Let's ask Bernstein's Stacy Rasgon, one of the top chip analysts on the street. Welcome back. I take it your answer is no. You call this the most expensive of all of the AI stories by a wide margin.
It is. So it's on a forward basis, it's 45 times earnings. You know, Nvidia's 30 or 31. Intel's 32 even. So, I mean, and it is. And I'd say expectations, you talked about the stock up a lot of the last 3 months. Expectations over the last 3 months are clearly up a ton as well. I think the company did something smart by that. And by the way, all that matters on this print really is the AI number, right? They gave a forecast for it last quarter. They said they think they'll do more than $2 billion this year. I'd say the expectations are for considerably more than that. And that really, I think, is going to be what determines what the stock does, is like, how do they construct, the trajectory for that like path as we go through the year? How much more is it? Better be more than 2 billion, but how much more is it over what time frame? When does it hit? And how can they, kind of present that potentially in the wake of a core business that, by the way, may not be doing as well as might be hoped, especially given Intel's results last week. So that'll be what people are looking for. It's all about that AI number.
I mean, this is a stock that really seems to be benefiting from the Nvidia halo. I
Sure.
think that's fair to say. However, I was reading a note, and I want your take on this. When you look at what the projections are of AMD's new AI chip relative to Nvidia in, let's say, 2025, we're talking apples and oranges. The projections I saw, 800,000 units of AMD's chip relative to 3.2 million for Nvidia. What are we to make of that?
And by the way, that would still be, a relatively sizable market share. I mean, it took them, 7 or 8 years to get to a share that would be on that order in CPUs. And that was against a competitor that, had fallen down. Like Nvidia hasn't done that yet. So we'll see. But, I've said this, I think, on this show before. And this is one reason people are in AMD, because no matter what they do, if they do 2 billion this year, if they do 4 billion or 6 or whatever, like if Nvidia does 60, that will be viewed as very disappointing. It's a rounding error is the phrase that I used. It's very small in the context of the overall potential size of this market. Now that can be attractive because like AMD doesn't necessarily have to do $60 billion at least right away. And maybe people are happy with 6. But yes, like in the grand scheme of things, I mean, they're going to be, it's a second source and probably not a big one relative to where Nvidia probably goes if this market really takes off. It's Nvidia's game to lose. At this point, Nvidia's not showing any signs that they're losing.
It's really interesting when I look at, I get your market perform rating because the stock has ripped so much. Is this correct that your price target on AMD is 120, which is $50 lower than where it is now? And how do we rectify that?
Well, so look, I've said this here before is also don't read too much into price targets at any given moment. We actually took the target up beginning of the year. The stock has ripped, right? And I'm not in the habit of taking, adjusting targets and everything on a daily basis. Most of the people on the sell side are not. Expectations have ripped materially in the last, like several weeks, like between the beginning of the year and into the print. And we'll see what is justified, I guess, after they report tonight. But some of that is just lag. I mean, I wouldn't read too much into it.
No, I get you. But lastly, but you don't look at something like, I know it's a bigger step to downgrade a name, but on valuation basis, are you close to a valuation downgrade on AMD? And could tonight be the tipping point?
So look,
I knew you'd love that one.
We talked about this last time. Like we downgraded it a year ago. And the call at this in January last year, the call at that point was gross margins and earnings are far too high. Absolutely true. They miss numbers every single quarter. And yet the stock more than doubled. And why was it? That was because the AI story was really able to kind of take hold. It's only been a narrative. They haven't really seen any dollars yet. Like, well, this will be the first quarter we see something material in the numbers. There's a very possible scenario where numbers themselves continue to miss, and yet they keep that AI dream alive. Like, I understand why the stock has been working. At 45 or 50 times earnings, like, I have a hard time, like, getting behind that. It's a hard call to make. But I understand tactically why it's been working. I mean, sure.
I'm sure. I mean, look, I think we all do. That's the great conundrum here of these stocks that continue to work. And at some point, you got to, live up to the hype. We'll see if they do. I appreciate your time so very much, Stace. Thank you very much.